Can you...
Stress testing banks during COVID-19, dated 15th of December 2020. I have a question about one of the criteria APRA uses to stress test a bank, and that is a fall in real estate prices, or to use a simple explanation, the ability of a bank to maintain liquidity during a real estate meltdown. Can I say it like that?
Well, I think, Senator, it's more a question of whether they can sustain their solvency, which for us is more of an issue of capital, but liquidity is an important consideration as well.
Thank you. From the report, the figure APRA used as a proxy for a real estate meltdown was the loss of $49 billion in residential mortgages over 3 years. Is that correct?
That sounds about right, I think, Senator. I don't have the document in front of me, but
that's what I'm reading. Right. Thank you. With that loss being 30% of the total bank loss in the period of the stress test, as a loss rate, this would translate into 2% of Australian banks' residential mortgage loan book. Is this correct? And please confirm your figure for the value of residential mortgages held by Australian banks. What is it?
Oh, well, I think if we publish that number, Senator, I'm quite comfortable it's correct. Total mortgages, the banking system would be...
No, total residential mortgages.
Yeah, sorry, total residential mortgages, so housing loans we're talking about here, owner-occupiers and investors, would be, it's in the order of $1 trillion, but...
Well, I think, Senator, that's something that we can come back to you on.
Thank you for that.
Be on the number. Very happy to take it on notice.
Okay, thank you. Final question on this, this topic before moving on to a simple topic. Can I confirm that APRA is projecting a real estate meltdown would only cost our banks $49 billion in losses on mortgages, and that loss would accrue over 3 years? That seems to be a very favourable assumption for the banks.
Well, that's the impact that we expect to have on the banks, given they have collateral against their loans. Many loans have very low loan-to-value ratios, so in many cases, banks would have loans that, even with a substantial fall in real estate values, the banks would incur no losses. That's not to say the borrowers would be unaffected by any means.
Well, I think that's the concern.
I just add, Senator?
Sorry, go ahead.
Senator, I was going to add, I mean, it's just to your question of projection or forecast. This is a stress test, so it is a set of assumptions that we use to look at the resilience of the sector and the entities involved. So it's not a forecast or projection.
Okay, thank you. It's just that our constituents are concerned that we've had 20 years of the banks putting a lot of money into real estate and taking it away from small businesses and funneling it into real estate. And we've seen real estate prices increase a lot recently. Some people are calling it a bubble. So basically the question amounts to, are you letting the banks do as they please and then sweeten the impact for the banks?
Well, Senator, we don't allow the banks to do what they please. We've got a raft of prudential standards that ask the banks, as they're making commercial decisions, to take risk into account. And where we see risks, and I think an example of that would be the recent increase in the buffer, APRA acts and takes action.
Okay, thank you.
So, Senator Roberts, are we getting...
Yeah, a very short question.
The end. And if I can just note for the record that Mr. John Lonsdale was the one who provided that answer, just leading into your next question. Yep.
Apologies, Chair.
That's okay.
Does APRA embed staff in financial institutions like, say, the big four banks?
No.
Okay, thank you.
Thank you, Senator